little thinner though. What do we have? It is absolutely flat, nothing on the Nifty. Blinking red and green, undecided. Nifty Bank is up about 0.1. You've got the Nifty, the mid-cap index, which is up 0.04. Again, nothing. And the small cap index, I guess, should be something similar as well. 850 up and about 540 lower. That is the advances to decline ratio. The heat map should give you a sense of where we are starting, and then we'll pick it up from there. So, I mean, I guess, given the state of the Nifty, it should be kind of split right in the middle. What do we have? Yeah, I mean, absolutely. Split right down the middle. Eternal, BEL, Hindalco are some of the names which are higher. On the other end, you've got ONGC, Infosys, and Tech Mahindra. So that's the start. 6-point change in the Nifty. Absolutely flat screen. Rima.
Well, profit booking visible in the large cap IT names after yesterday's mini rebound. Infosys down nearly 2%, so giving up all of yesterday's gains. That's one of the big losers. Tech Mahindra, HCL Tech have a decline of more than 1%, so Tech Mahindra is sliding nearly 1.5%. For TCS and Wipro, the cut is about 0.5%. ONGC is your top Nifty loser. That's seeing a cut of nearly 3% now. Coal India is under pressure. Then you've got a lot of these IT names. Adani Ports is under pressure. Power Grid, Nestle, NTPC, Tata Motors, passenger vehicles. Across sectors, some of these stocks are opening in the red. But it's a flat start. On the way up, you've got BEL. That's the big gainer. Stock is now up 3.5% in the last 3 trading sessions. Hindalco, Tata Steel seeing some buying. Eternal is gaining. Trent, Ultratech Cement, ITC also up. But very, very quiet move. In terms of a sectoral trend, if you have to discern something, it's that IT once again is on the back foot and some profits are being taken off.
Well, that's right, Rima. You know, a few stocks in the broader markets, though, they're calling for attention. CE Info, well, that one's up close on 7%. So big move is what we're seeing on that particular name. And Cohance, another stock that's seen a sharp correction from the recent peak. Well, that one as well is buzzing in today's trading session. Besides that, a few of those gainers yesterday, they're continuing with their winning ways. Case in point being a Unicommerce Solutions. That stock is up. Easy Trip, a stock that's underperformed big time. That as well is up and about. And NetWeb, the products company. Yesterday, I think the stock was up close to 12%. Today as well, it's seeing some follow through with a gain of close to around 3%. You know, and that's on rather good volumes as well. So just keep an eye out on that one. Dilip Bilcon's another stock that's doing pretty well in today's trading session. So keep an eye out on that name. On the flip side, your Matrimony.com, well, that stock, in fact, has come in for some profit taking. You know, that's down, I think, close to around 6%. GE Power as well, the stock had a good run, but that as well has come in for some profit taking in today's trading session. So, you know, things are looking pretty okay, at least for the broader markets. On the headline index, it's as flat as can be. And NetWeb is a stock that's up close to 3%, but I think NewGen, that's the one that I was referring to with regard to a products company. It's seen a sharp correction from the recent peak. Yes, it was up 10%, and NewGen is up even in today's trading session. I think it's up close to around 4% or thereabouts. Rima?
Okay. All right, that's the state of affairs as we open trade unchanged on the Nifty and the Sensex. Kenneth Andrade, CIO, Old Bridge Asset Management, is now joining on the show. Kenneth, great to have you this morning. Thank you very much for joining in. I suspect the first one of 2026. We're chatting with Kenneth, so it's been a while. Thank you for joining in. So let's begin with how you see the markets. It's been about 1.5 months. It's been extremely tough for the technology names globally and back home in India. And Old Bridge, what is the analysis?
I mean, it's firstly on the marketplace, it's a very rotational market. And while technology has been holding steady for the last 6 months, it's their turn to actually take people to take some money off the table. The question remains out here is, are these companies running to stand still? Or you will find a few businesses out there that could actually use the opportunity to scale up quite dramatically. I think that question is not very clear at this point in time. What is a question mark, which I think everybody out there already knows and understands, that this is not status quo. This technology change or this automation is not status quo for a lot of businesses. And I think that's what the markets actually are reacting to. So from a standpoint of just IT services, I mean, it's not very clear how companies will adapt and how fast they will be able to adapt, but there will be a lot of uncertainty on how these businesses will meet any kind of growth trajectory, at least in the near term. One thing I must say is completely in favor for these companies is that historically, they are quite quite comfortable in terms of where their valuations are. I mean, extremely comfortable in terms of where their valuations are. But with all the uncertainty around, I'm not too sure that will be the best part of the marketplace to be in.
Kenneth, hi, good morning. Thanks for joining in. Now, wear your mid and small cap specialist hat, Kenneth, if you will. And tell us where, because that is where, sometimes stocks get thrown away because of whatever reason. And we've heard it from other veteran fund managers as well, that's the opportunity when, people, long-term investors get frustrated and say, I mean, it's idiosyncratic. I mean, it's not one sector which has a big, huge tailwind or anything, but good businesses which now have fallen quite a bit. So where are those opportunities, Kenneth? And let's talk stocks for a change, Kenneth.
Right. So let me try and put this together, right? It's an opportunity in the making, and you'll see all of it in 2026. Stocks are half from where they used to be. A lot of them are down from where they used to be, and some of them are 50% from where they used to be. Numbers are nice. Balance sheets are consolidating. So there's no debt. There's cash on balance sheet, and market caps are down. There is a lot of uncertainty on on how these companies will meet any kind of growth trajectory. And I think you will get a handful of stocks, if I'm not mistaken, or even more that we can come across, which are already in that zone. So whether it is mid caps, small caps, large caps, I think this marketplace is opening up, or 2026 is opening up to be a great stock because market are a great time to put a portfolio in place. Now, let me try and rewind this by a little bit of industry data that is out there. There are a couple of industries out there which are already through their capex cycle. Okay, the one industry that went through a massive spike post the pandemic was chemicals. A lot of capex came into play, and they are at the end of the capex cycle. Commodity prices are not supporting that capex, but none of them are losing money. The second one, I could also say very safely, is almost an adjacency of that business, which is pharmaceuticals, and especially on the chemicals and on the chemical side. There also, capex is behind a lot of large and mid-sized companies there. But the opportunity is still probably a couple of years away. I won't even say a couple of years away. Some part of that is already showing up in balance sheets. So take those two sectors and park them. They have done nothing in the last, I would say, 4 years, or the last probably 5 years. They've done nothing in the last 4 to 5 years. The other one that has done reasonably well, at least in the near term, has been automotive and that entire value chain. You've got some significant capex coming up in that sector, and it's an ongoing capex. If you take the large companies there from an OEM perspective, you will get reasonable amount of growth. Valuations we can obviously debate, but these are large companies, very well diversified, very well researched, and all data that has to be there is already out there. Then you break it down into a couple of the value chain, the automotives, etc. And I think you will get reasonable amount of growth there. Valuation also in some spaces are okay. And then the most important part of that entire value chain is the financials. Okay, the lending businesses. There, I think across the board, and we've been saying this for a while, is valuations are reasonably comfortable. But there is an absence of growth on the corporate lending side. Apart from that, I think we are cyclically all over the place as far as household lending, automotive lending, everything else that is concerned out there. But valuations are now capturing all of that is out there. So you're setting up for a nice 2026. But we're a little cautious that we're getting into financial year 2027 saying that that earnings growth will be double digit into year 2027. But that's always a narrative that's within the marketplace. just before the new year starts or new financial year starts. So I'll be a little cautious of that kind of optimism because the market actually lacks a little bit of demand both domestically as well as for all what has happened internationally. I think the supply chains still have to get put into place. India still has to find its space in the international trade. So I think we're set up for a nice quiet 2027. But at the same time, the underlying opportunities that are there, look for companies where capex is behind us, look for industries as a whole subset which has faced a lot of pricing pressure, which effectively means no inflation that is there. And you should be able to put a portfolio together in 2027, 26 into 27.
Yeah. That's well explained. So chemicals, auto anchs, and financials, right, Kenneth?
Oh, the list goes on.
Three areas that you mentioned.
So the list goes on. There's something happening in commodities also. Okay. So the big distraction in commodities was the price rise in all the basic metals. I would say it's a distraction because all companies out there are putting enormous amount of capital to work. I think the largest zinc player is doubling capacity over the next 4 years. The steel manufacturers continue to plod on with capacity, which is equivalent to a 10% growth. They'll bring in 10% annual capacity every year. In aluminium, there's almost 60% of incremental balance sheet getting deployed out there. So I think we have started we are putting capital to work. Of course, it's not showing in corporate lending because there are other avenues to raise capital. But like I said, Prashant, it's quite broad-based this time compared to what we've ever seen before.
Hi, Kenneth. Good morning. Good to see you, Ben. Kenneth, in terms of cash, you were sitting on around 10%?
That's right. And
you all started deploying that?
It's not a significant cash number. I mean, my point of view on cash is that I still have 90% invested, right? So that's where the focus is all about. If I get 90% right, 10% is not going to bother us. But just the case on that 10% of cash, we had an exit. So we run a 25 stock portfolio out there, and there's an exit and we've had an exit of one company in that portfolio last month, which is showing up as cash. That should get deployed over the course of the next month or two.
All right. Kenneth, since you briefly spoke about metals, I just wanted your view. I look at your portfolio. Hindustan Zinc has been a decent size holding for you all. You have Hindalco as well in there. So non-ferrous, I think, has done relatively better in the recent past in comparison to ferrous. Since you all have both the ferrous as well as non-ferrous names, do you think it's time actually to lean towards ferrous in comparison to non-ferrous? As a fund, how are you all viewing it?
I think it's more stock driven than it's actually portfolio driven or everything driven out there, right? So the ferrous company that we own is basically spanning multiple countries out there, and there's something and there are reasonable opportunities at both extremes of in both the continents. In India itself, volumes have been reasonably good. In Europe, volumes have not been great, margins have not been great, but then cost savings are coming in significantly. There's also a lot of pricing pressure in Europe. Getting into the next couple of years, I think volume growth in the domestic market and some element of pricing should help in Europe, and you will see a sustainable growth in cash flows coming through this business. When it comes to the non-ferrous business, each of them have their own dynamic, but largely the way we calibrate our understanding of these two companies is the amount of capital that they're putting on the ground, and how monetizable is their cash flows.
Okay, all right. And I think you were talking about the conglomerate that's going through the corporate action, right? That's the one that you'll have a good chunk. You'll play the demerger.
No, we're not out there. We basically, in ferrous, we are in Tata Steel. The portfolio is domain in...
okay, the silver play is what you're...
Hindustan Zinc, and we got Hindustan Zinc as far as the zinc and the silver manufacturing.
Okay, all right. The other one I'm looking at is, the capital marketplace. And if I look at your portfolio, I think in terms of exchanges, you'll have gone in for IEX. I'm not sure whether you'll still have it or that's part of your portfolio, I think. So the coupling issue had crept up, which has caused the stock to come down. Your view on this theme on the whole?
So without making a comment on what's happening from a regulatory standpoint, it's a company that dominates that space. Today, I step back to Prashant's question on where do you find value in some kind of these spaces. I think it's a huge opportunity out there. It's an option value on the electricity market, and at the same time, it's traded. If I'm not mistaken, it's about 11,000 crores of market cap with 1,500 crores of cash on book, with 500 crores of incremental cash out there. So this stock is in the portfolio. Most of the numbers are in public domain. But when you talk about value and valuation at this point in time, I think we will overlook the macros in most sectors, because the macros can be a little bearish. But that's what also gives you a valuation opportunity in some of these names.
Yeah. We leave it.
Sorry, I don't know if we have like maybe 30 seconds. Kenneth, on leave us with your pick in the chemical space before you go, if you can.
We've got a front-ended chemical name out there, which is a large international name, but that's a front-ended name out there. We will come back, and you will see some part of that translate into our portfolio over the course of portfolio of portfolios. Now that we'll have two funds on the ground over the course of the next couple of months.
I see. Got that. Thank you very much, Kenneth, for that. Really appreciate your time and good sort of thought process in terms of how things are shaping up in a good way. So 26, 27, interesting time, and of course, look for companies where bulk of the capex is kind of behind. The big talking point, of course, remains the IT services space, and I think we've got a couple of companies waiting by. Rima, take it away.
Well, indeed, Ramani Datti, CFO of Team Lease Services, and Kapil Joshi, CEO, IT Staffing, Quest Corp, are now joining in on the show. And before that, I just want to put out one data point. In the first 9 months of FY26, the top 4 IT companies, TCS, Wipro, HCL Tech, and Infosys, have seen an overall headcount decline of more than 700 employees, largely on account of TCS and the restructuring that they did. But in the first 9 months of FY26, the large 4 IT companies have not added any headcount. If anything, it has declined. And clearly, there is a lot of worry because we've seen so many top CEOs, like, Anthropic CEO had warned that AI can eliminate about half of the entry-level jobs, white-collar entry-level jobs. So let's find out what the situation is. Ramani Datti and Kapil Joshi are now with us. Ramani, let me begin with you and what you are seeing when it comes to Team Lease, the extent of IT hiring, new jobs versus the number of people perhaps who've lost their jobs and the number of vacancies.
Yeah, good morning, Rima. As far as IT services is concerned, whatever job losses that we have seen in our industry happened, in fact, much before. By end of 24 and early 25, we have seen job cuts in IT services. And since then, it's been kind of stable as far as contract staffing is concerned. But overall, if we look at IT services, the trend that we have seen is that at entry level and early mid-level jobs, absolutely there is no net hiring that is happening because of the AI impact that we are seeing, mainly the jobs that are into testing, coding, debugging, and IT support, low-end IT skills. So these are the areas typically where the freshers and mid-level talent will be there. So those jobs are, we are seeing the disruption already happening because of AI. But the good news is that at high-end skills, niche skills, there is increasing demand and disproportionate increase in salary pay by both IT product companies as well as GCCs. So overall net impact on the IT investments by the companies is still at a very good level. But if we see only the number of net new jobs that are getting created, since the vast majority goes into entry-level jobs, there we are seeing definitely a dip.
So no job openings for entry-level and mid-level IT jobs, Ramani. Is that clear, or is it down? Is there some number?
It's much lower than what it used to be 2 years back. And we are seeing that number consistently coming down. And at least last 2 quarters, we haven't seen a net increase at the entry and mid-level jobs in IT services.
Okay. Is it possible to share the number of job applicants for entry level and mid level. What you have shared is from the company level, that they don't have a requirement for coders, manual testers, etc. But we still churn out so many engineers who are looking for jobs at the entry level. So is there a way to match the demand and supply in terms of numbers? Ramani, and then Kapil, if you could come in on that.
At least on this point, Rima, I don't have any concrete data point, because the way that the skills are also shifting so quickly in terms of the fungibility that is expected by the companies. And also, like, whenever there is an attrition, instead of backfilling, say, there are 5 open positions, companies are not backfilling all the 5 open positions. Thanks to AI, the backfilling is happening only for 2 or 3 positions. So obviously the supply is much higher at this stage across all the jobs, except for the top talent niche skills. But the demand is very much restricted. I would say it's only 30% is the demand in comparison with the supply side.
Yeah. So what are the skills? So when you get demand, right, Ramani, morning, from companies looking to hire, what are the skills they're looking for now in this space?
Yeah. So right now, the top skills that are in demand are the AI engineers, AI analysts, the forensic analysts, and AI leads, data annotators, as well as cloud cybersecurity. So these are the top 4 or 5 skills that we are seeing as they're in high demand across all sectors, be it IT services or GCCs or product companies.
These are skills, Ramani, where you know. So, for example, the way we say, well, you know, there are lakhs of IT engineers who pass out every year out of colleges, right? You know, what's the preparedness at that level when you get out of you know, educational institutes, Ramani, compared to or I mean, that's not changed yet. So it's all going to be it's all going to be retraining once again. What's happening? Yeah.
Yeah, at this stage, the preparedness of entry-level talent, the freshers on AI-related skills, I would say is very, very low. Maybe to some extent on certain roles like data annotation, since there's still low skill and training of AI models, there we are still seeing some level of demand. But at least at the mid-level and AI analyst level, we are not seeing any kind of fresher hiring that is happening at this stage.
No, because that skill that is not there, Ramani, or it's very hard to find at entry level, or it's you'd want experienced people with some base of knowledge and these skills as well.
Yeah. No, this skill, we can't expect it from the freshers and entry-level talent. Obviously, companies have to invest in upskilling their existing talent, be it entry-level or at mid-level. And that's what we've been seeing now. Like most of the IT services companies and as well as GCCs, they're all investing heavily in their L&D. They're also talking about upskilling their existing talent in AI models, AI engineering, and related areas. So it's definitely at entry level. Right now, there is no skill set that is available on the AI level. But at the same time, upskilling them is also not that difficult. What we have seen is, especially in GCC segment, with 3 to 4 months of upskilling camps that these companies are conducting, they're able to use the existing talent for the new projects that they are taking up.
Kapil, you know, thank you for waiting by patiently. Jump into the discussion. First, tell us what is it that you are seeing in terms of Quest Corp. We understand that specialized AI jobs are in demand, not just in tech companies, but even outside in other services. But at the entry level and mid level, what is it that you're seeing? And also, in a way, if you can help understanding the demand versus supply for entry and mid level. Because as we were discussing, there's so much supply. Engineers are saying who graduate that we're not finding jobs right now. But IT companies are saying, or, you know, that we don't have enough talent. We're not able to match the talent. So if you could give a sense of the demand and supply, I think Ramani gave a number of 30%, that only 30% of the supply is being met, is being matched with the demand.
Yeah. So, Rima, let me give some statistics because we recently published our annual demand supply gap report. See, I tell you, in India, you know, we have seen almost 1.8 million, 18 lakhs job opening last year. Okay, if you see 50% of them was refilling, still there was 9 lakhs new job got created. But what is happening that demand are shifting, and scoot towards the emerging technology. These are the technology like AI, data, cloud, cyber security, where we see the most of the demand. 2 years back, this emerging skill used to contribute 38% of the total demand. Now they contribute more than 50% of the total demand. Second thing, we see the demand from GCC side. Now GCC plus product company together contribute almost 48% of the total demand. So that piece is growing really, really well. On Ramni's point and your point, yes, we see the demand, overall demand mix. Then earlier it used to be 20% at entry level job, but now it has come down to 15%. But surprisingly, the mid-level hiring has increased, contribution from 40% to 65%. It means organizations are looking for highly talented people who are experienced and those who have experience in the emerging technology. Third thing which we have seen in our report is that Tier 2 are also emerging very aggressively. Almost 15% of total demand is coming from the Tier 2 cities.
Okay, so Tier 2...
And as long as AI is concerned, let me tell you, India has roughly 500,000 workforce working on AI and data, which is expected to reach at 1.2 million by end of next year. But still, we expect there will be 1 million job will be, vacant job will be there. So there is a huge demand supply gap, especially in the GNAI, ML ops, LLM ops. Okay. Some of the AI skills, we have seen 30 to 40% demand supply gap. It means for every 10 open jobs, there are only 5 to 6 job seekers available in the market right now. And reskilling is the only way to way forward.
You said there were 18 lakh job openings. Is that related to tech only? Kapil?
Sorry, can you repeat your question?
Yes. You started by saying 18 lakh job openings. This, I presume, is in tech?
Yep.
Okay. And how much would be the supply of talent?
See, demands are skewed towards, there are two angles to it. One, demands are skewed towards the mid-level. Mid-level hiring has gone up from 40% to 65% now. And second thing is the demand earlier, used to be 60 to 65% for your plain vanilla entry-level job, L1, L2 support, infrastructure, testing, business analyst. Now, this is just opposite. Whatever demand you see right now, 50%, more than 50% are, in emerging technology where we see the demand supply gap. And that is where we also observed that, the fulfillment time to close this position has increased from 45 days to 90 days.
Yeah. I have a question, slightly off-beat, off-tangent rather, not off-beat question for both of you. Kapil, if I can ask you, there is, because IT jobs and job creation there has been such a big pillar of, supporting other industries as well, because these have been traditionally better paying jobs, well-paying jobs at a higher end. There is concern that if, net hiring is already negative for some of these companies, large companies for the last 1.5, 2 years. Given what you're describing, is there reason to be worried, outside of software? I'm talking about the demand signal for some of the other industries, real estate, for example, and hubs like Bangalore, etc. Any thoughts, Kapil? I'm sure it's a question which comes up and you've thought about it, discussed, etc. What can you share?
So, see, there is some audio problem, but what I understand, you want to understand the, AI impact on the entry-level job. See,
No. Sorry. No. Kapil, my question. Let me. I think there is we'll fix that talkback issue. I think it's slipping in and out of your ear. Ramani, if you got that, would you want to take that?
Yes. No, definitely. The urban India and the consumption and many other related industries which are urban based are still driven by the tech talent. And whenever there is a slowness in overall IT hiring or job cuts in IT, we see that directly reflecting in urban consumption as well. And as you rightly mentioned, real estate can be one of the industries that can be hit. And we have already seen that being hit over the last couple of years because of the overall slowness in IT hiring and IT jobs. And having said that, as I mentioned earlier, while the net new jobs are getting impacted, the overall IT spending is not coming down substantially. So we are still seeing, especially the niche skill, cutting edge technologies and niche skills. So their companies are willing to pay 2x, 3x higher than what it was maybe a couple of years back. So the salary levels are still much higher at top talent level. The biggest hit that we are seeing right now is at entry level. And we are still seeing more and more GCCs coming in, setting up their shops in India, as well as the existing GCCs expanding the number of jobs will to some extent give cushion to this aspect. Because now with the EU deal being signed off, we are also seeing more and more European-based companies setting up GCCs in India. Historically, the majority of the GCCs that we have seen are all US-based. Now we are seeing a lot more discussions happening on the European-based GCC front.
We'll leave the conversation here. Kapil, Ramani, thank you very much for joining in and sharing the insights on this particular issue. We will slip into a very short break. On the other side, we'll get your conversation with Dr. Reddy's G.V. Prasad from the BioAsia conference.
Co-presented by Bank of Maharashtra, Ek Parivar, Ek Bank. Co-powered by Century HDF Premium Plus.
अपनी लाडली की सेफ्टी से समझौता? नो चांस। इसीलिए पॉलीकैप ग्रीन वायर्स। इसमें है 99.97% हाई कंडक्टिव प्योर कॉपर। ये साधारण वायर्स के मुकाबले जल्दी गर्म नहीं होते। पॉलीकैप ग्रीन वायर्स। इंडिया सेफ, हैप्पी कनेक्शन।
In the future, AI will use massive amounts of energy. So what is the future of energy?
Infinite clean energy. Avada, always clean, always on.
We have carefully reviewed your performance and promoting you to branch manager.
Sir. Hello. Motilal Oswal.
When life goes to the next level, download Rise by Motilal Oswal. Investments and securities market are subject to market risks. Read all the related documents carefully before investing.
Jazz में बड़ी-बड़ी चीजें जाते हैं ना पापा?
बड़े-बड़े सपने भी जाते हैं.
Sir, this is the shop I was telling you about.
Namaste. I love those. हाँ मैं पैक कर 10,000.
अमेरिका भिजवाने हो जाएगा ना?
हो जाएगा.
हम सिर्फ देश विदेश में व्यापार नहीं बढ़ाते हैं।
आपके बड़े-बड़े सपने जा रहे हैं।
सपनों को किनारे तक पहुंचाते हैं। अदानी, हम करके दिखाते हैं।
आपके कलीग्स भी आपका परिवार है। इनकी सेफ्टी से समझौता? नो चांस। इसीलिए पॉलीकैप ग्रीन वायर्स। इनके सुपीरियर इंसुलेशन इमरजेंसी में दे कम धुआं। Polycab Green Wires, India's safe, happy connection.
This is Network 18, and you're watching CNBC-TV18.
Co-powered by SBI, the banker to every Indian, truly.
Welcome back. A couple of stocks actually are moving around. Vari Energy is actually that one selling off on decent volume, so it's moved to the low point of the day. Keep an eye out on that one. And the mid-cap tech companies actually have come in for some selling. You look at Persistent, you look at Coforge. These stocks actually the last couple of days have bounced off the lows, but today they've come in for some selling. But moving on then, the 23rd edition of the BioAsia 2026 International Summit is currently underway in Hyderabad. This year's theme, Tech Bio Unleashed, AI Automation and the Biology Revolution. On the sidelines of the summit, my colleague Ekta Batra spoke to Dr. Reddy's co-chairman and MD, Mr. G.V. Prasad, and began by asking him about the company's FY27 outlook and the expected timeline for the launch of its generic semaglutide in Canada. Let's listen in to what he had to say.
There is very little outstanding information that the regulator wants from us, and we will, give them whatever they ask for. And if everything goes well, May should be a timeline for which we think will happen.
Okay, so we are still working.
We are just waiting for approval. Once approved, we'll launch. There's nothing stopping us from launching.
So the outstanding issues you would say are resolved at this point?
More or less, yeah.
Okay. Any kind of site inspection?
Usually they may want some information, things like that. There's no inspection outstanding. It is just more information. Information requests we get, and then we submit the information.
How big or how lucrative a market would Canada be?
So Canada, for the initial time when we will be alone in the market for a few months, will be very significant. After that, competition will come in, like any other market, and then we'll start seeing price erosion.
Okay, so let me understand this. When you enter the market initially, assuming...
We are assuming. That's an assumption, yes. And we could be wrong. Yeah. But as far as we know, we believe that we are close to being the only one being approved in the next few months. Somebody may follow after that, and then new approvals may come in. But we believe that we will have some time alone. That would be a nice period for us.
Could you quantify that?
I can't, because it's very difficult.
Okay. What about, what are we working with when it comes to the emerging markets? Turkey, Brazil, China, all of them?
So we plan to launch in whichever market we have access to, where the patents allow us to launch, and also where we've registered the product, or where we have a partner who's registering our product. So we've done a number of registration submissions. We are awaiting approvals, and as soon as they get approved, we'll start launching.
If you had to prioritize the markets at this point in time in terms of how lucrative they are for semaglutide, what would they be, including India?
In the near term, Canada is the biggest opportunity, but that's subject to many things.
Yes.
So if it works out, if it plays out, it could be a sizable market. India, the sheer volume will be high because of the number of people in this country. But at the same time, India will be a very competitive market. There are at least 25 others who are going to launch on day one here. In the other markets, it won't be so crowded at entry time. So in that sense, I think India will be an attractive market in terms of numbers, but it will also be highly competitive. It's also an opportunity to innovate a little bit in the device, things like that. So we don't know how it will turn out. But this category is a large category. The other thing is the life cycle play is also very big in this area. A lot of follow-on drugs are coming from Novo itself, as well as other innovators. So I would say the life cycles of products may be shorter than we anticipate.
Any in-licensing deals that you would then look at in order for newer novel therapies?
If companies are open to work with us and they are not launching directly, we'd certainly love to partner.
Okay. That's one of the strategies that you've taken for your India market, which has grown 19% in the quarter gone by. You've in-licensed products, and that's possibly what's helped the market. Is that correct?
Absolutely. We have started working with innovators around the world. Small to medium-sized innovators who don't have local marketing teams here. And we are bringing access to patients, products which they otherwise would not have access to through these partnerships. And some of them are really unique and address a big unmet need. And like our toripalimab, which we launched here, is doing well. And it's also addressing an indication which was underserved in this country.
Are you guiding or are you working with this kind of 15%, 20% growth in India going forward?
No. We generally don't give guidance. But our goal is to, at a company level, be a double-digit growth.
Okay. And what about the US? Because now we have a Revlimid going off.
Gone already.
Gone. So what does it look like in terms of launches and in terms of price pressure?
So there is pricing pressure. That's a reality of that market. Also, we see a lot of increased competition from India itself. Earlier days, we used to see 5 ANDAs, 3 ANDAs. Now it's 20 ANDAs on NCE-1 date. So the severity of competition has eroded the attractiveness of that market. But there are still opportunities, there are still niches, there are still exclusivity plays. So we'll do our best to bring products with less competition to the market. But, you know, that depends a lot on the competition also.
But you have a couple of biosimilars in your pipeline for the US.
We do have.
Yes.
Some of them are late now, but we also have some very attractive first-to-market opportunities. They'll start, being meaningful 27, 28 onwards.
Denosumab and rituximab have complete response letters on them. Would FY27 be when you could probably hear back?
Yeah, rituximab is likely to be launched.
In FY27?
FY27, absolutely.
Okay. Talking about the US, we have Section 232, which the US government has said they're still exploring when it comes to pharmaceuticals. Is that a threat considering that generics play such a huge part there?
Generics is a large portion of the medicines the US patients take. So pricing will be impacted if duties are imposed on that, tariffs are imposed. So my guess is it's less likely to have tariffs because it affects a lot of people. And in the end, the manufacturer doesn't have enough margin to absorb duties today. So in that sense, I feel, and I hope they don't impose any tariffs on generics. And if they do also, I think it'll be absorbed by the market.
Are you rethinking your US strategy considering Section 232 and maybe even MFN, onshoring is becoming quite a big initiative?
MFN is applicable only to innovative branded products. We don't operate in that segment. But we are looking hard at the product mix, portfolio mix in the US to bring up our margins.
A lot of companies have evaluated M&A. Indian pharmaceutical companies, they've at least evaluated large-size mergers. Is that something that Dr. Reddy's is looking at? What is your M&A strategy?
So our M&A strategy is to look at longer life cycle products, stable margins, and something that can be easily integrated with our existing businesses, more like tuck-in acquisitions. So it will be largely in the space of brands, branded generics for India, for emerging markets, significant emerging markets. And we've also put a stake in the ground in terms of our presence in consumer health. So we are open to branded consumer health opportunities anywhere in the world.
Okay. But US would not be a priority?
We do have a US business also. So if there is a branded consumer health opportunity in the US, we will take a look at it depending on the valuations.
Interesting conversation there, but back to the India AI Summit. Shireen is in conversation with Cristiano Amon, President CEO of Qualcomm.
Laptop to buy things online, not anymore. The majority of the world uses phones. The laptop's the exception. So I think what's going to happen is you're going to have those new classes of mobile devices. We see smart glasses. We see things that people wear, like jewelry becomes smart. Of course, wearables become smart because now you carry the agent with you all the time, and the agent see what you see. In case of glasses, hear what you hear. And workloads are going to shift from phones to those new devices. So the phone's not going to go anywhere in the same way that the laptop didn't go anywhere, but it's going to change its usability. It's going to be doing a lot of processing for multiple devices. It's going to do phone things, but some workloads are going to go to like personal AI devices.
I thought you were going to be wearing your Meta glasses powered by Qualcomm.
I should have. I actually got it with me, but I should have.
But let's talk a little bit about India. And I think the objective and the mission that the Indian government has stated very clearly is the idea of democratizing artificial intelligence in India. How do we make that happen? And what do you believe the road ahead needs to look like for that to truly be a reality?
Yeah. Look, I am incredibly optimistic about the opportunities here in India. And I think just to be consistent with everything I said, I think in this conversation, I go back to the past. If you just look when the smartphone, revolution started here in India, if you look at the amount of data that is consumed by a user, India is probably among some of the top in the world. And if you look at how fast the internet developed and how things leapfrog, into the future, especially when you think about digital payments and everything that is now happening with smartphones. When I look of AI, that's going to repeat itself in India, but it's going to be more powerful. The reason it's going to be more powerful is because AI has an incredible ability to empower people. The same way that connecting to the internet has fundamentally changed, I think, people access to information. I think AI is going to take that to the next level. How you get access to information, how you train yourself, how you get instant feedback about things, how you learn about things, how you do different things augmented by an agent, and how the entire economy of agents is going to get developed. I think India has an opportunity to be one of the fastest growing AI nations in the world.
The fastest growing AI nations in the world, because there are questions being asked about the fact that we're just about getting into the LLM race. We don't have the kind of compute capacity that other countries have at this point in time. We do have the talent. That's our biggest advantage. But do you truly believe that AI is going to be the fastest AI nation?
Look, let's kind of zoom out, right, and see how this is really is going to play out. If you think about the phone today, right? The phone is the most cloud-connected device in the world, and it's also the biggest development platform ever created. And if you look about how you have services, there are some global services, some India services going to the cloud, and you have this thing through phones really democratize and reaching everything. The way I think about AI, and going back to the conversation about agents being very contextual aware, I think you're going to have different models going to be developed. There's going to be global models. They're going to be Indian models. They're going to be available. But then the real value is how quickly can you deploy this across industries? How many people can you reach with the technology? How many different things? And I think that's the opportunity for India.
Okay, well, that is the Qualcomm management with my colleague Shireen, and we will go back to it. It's an interesting day of conversations on the sidelines, of course, of the AI Impact Summit. Actually, talking about the AI Impact Summit 2026, let's bring in Ashmit now, who is joining us from Ground Zero with just a kind of sort of preview of what we should expect from there. Ashmit, take it away.
Well, we're coming to you from the CNBC-TV18 Edge AI studio. We're right here at the AI Summit at Bharat Mandapam at the Expo area. Clearly, the big focus, the big talking points have been, as Shireen was pointing out, a lot of the conversations pertain to what the road ahead looks like with respect to AI application, what it means in terms of disruption, not just for jobs, but also for industries. That's only one part of the conversation. The other part of the conversation, and in fact, we're likely to see announcements along those lines later today, will be India's own sovereign tech. We're likely to see India's own sovereign models. Sarvam, the Indian AI company, is likely to launch its own LLM. It's likely to be a 100 billion plus parameter LLM, large language model, that is likely to be launched later today. That is something that we will be keeping an eye on. Not just that, and here's some quirky bits as well. India could very well be landing up with the Guinness World Record for the highest number of people pledging to use AI responsibly. That's something that's expected later today as well. The announcement expected around 11:30 in the presence of the IT Minister Ashwini Vaishnav himself. Those are the two takeaways that we're expecting today. But in the course of this week, as we move forward, a key focus area that we've been hearing repeatedly from the ministry, from the government, from the IT Minister himself is expect big announcements with respect to data infrastructure here in the country. We've already seen the likes of Google, Microsoft, Amazon commit large amounts of money. Between them, over $70 billion. That figure, through the course of this week, is likely to climb higher than $200 billion. Those are the figures that are being estimated, that are being put out by the government themselves. And of course, one key aspect to watch out for will be the inaugural session. That inaugural session is tomorrow. The AI Impact Summit will be launched officially by the Prime Minister, and he will be in the presence of very senior officials from various companies. We're talking about the likes of Sam Altman, Sundar Pichai. They will all be here. They will be present. They will be giving their keynote addresses. prices, and hopefully share some color, some insight on what the road ahead in 2026 looks like, not just AI in terms of as a technology, but also in terms of disruption that it's likely to cause, what it means for jobs, what it means in terms of governance, in terms of regulation, and of course, in terms of applications and deployment across industries. Key questions that hopefully will unravel, will get unpacked as we move forward in the space of the AI Impact Summit week.
Thank you, Ashmit. It's an action-packed, and Indian IT is truly at a crossroad. AI for disruption or AI will be an enabler. We will slip into a very short break. On the other side, Manisha Gupta will join in and talk about commodities. Stay tuned.
Services power your daily life. From instant deliveries to seamless payments, they are now the backbone of India's economy. Services contributed nearly 55% to India's GVA, employs around 31.5% of the workforce, and its growth is outpacing agriculture and industry. Join India's growth story with Kotak Services Fund, capturing opportunities across sectors. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
अरे टेंशन किस बात की? सेंचुरी प्रोवुड का प्रीमियम प्लस है ना, लो एमिशन है, हाई डेंसिटी है, वाटर रेजिस्टेंट भी, टर्माइट एंड बोरो रेजिस्टेंट भी है। यानी ये है जहां नो टेंशन वहां।
प्रीमियम प्लस बाय सेंचुरी प्रोवुड।
AU सेविंग्स अकाउंट में मिलते हैं अमेजिंग बेनिफिट्स, पेपरलेस बैंकिंग एंड हायर इंटरेस्ट, वो भी हर महीने।
मनी 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 एवरी मंथ। सोच बदलो और बैंक भी।
Look, this famous guy is giving me investment tips.
Sure, it's only for you.
Oh. Pay attention. From afar, it felt so true. A famous face giving advice with a smile. But looking closer, I saw I was being trapped by a fake videos live. Well said, well said. SEBI and NSE advise, in any video, focus on slow eyelashes and faulty lip sync. Believe and trust only on authorized sources. Wah!
सोच कर, समझ कर, इन्वेस्ट कर।
NSE द्वारा निवेशकों के हित में जारी।
India Premium Economy boarding now.
I don't walk. I cruise. I don't sit. I lounge. I feel fresh. Hot meals bring a smile. Warm care every mile. I found my place in the sky.
My son Ishan will become a doctor, a big doctor. My Ishan will be a scientist. So what's Ishan going to be?
Ishan?
Whatever Ishan becomes, LIC's Amrit Bal Children Policy will always be there for him. बड़े सपनों का रखे ख्याल।
Availing Bank of Baroda's premium NRI services is a masterstroke. Bank of Baroda, India's international bank.
Welcome back. Let's talk commodities now. Manisha is joining us here. Manisha, you're looking at coal, and it's been a while since we've spoken about coal, but it's been steadily creeping up.
Oh, it has been, yes. We haven't had time to talk about coal because we've been talking about gold and silver and copper and various other commodities. But coal needs a mention right now because it has been surging higher. It is up 9% in 2026 till time. It is trading at a one-year highs, and it is inching very close to that $120 a ton mark therein. Well, there are various reasons for the support that coal prices seem to be looking at. To begin with, it is the Chinese regulators saying that they are trying to move to streamline the coal industry. China, remember, is the largest consumer, producer of coal as well. And when China wants to make it efficient and align the overall supply chain, you are looking at support coming in for prices from there. And then it has been about the US as well, directing $175 million in federal funds to upgrade plants and to aid coal-fired power sector as well, especially when it comes to electricity, defense, etc. And that has been supportive. When you look at the supply side issues, well, that is another thing that seems to be contributing to price rise. Australia is looking at weather concerns, a lot of rain there as well. And then you have Russia also facing logistic issues supporting prices. In the Indian markets itself, we are looking at a stronger growth when it comes to coal. There is rising electricity demand. The total demand is projected at 1.5 billion tons by 2030, which would be a record number going forward. Also, when you look at the Indian power sector demand, well, that contributes nearly 73% of total demand, and that has been surging higher. The non-power sector, which is steel and cement, the demand therein also is seen as 470 million tons by 2030. So whichever way that you look, you're looking at growing demand at least until 2030. So it's not peaked yet, as earlier reports were suggesting. Take a look at the numbers here. In FY 2025, we've seen coal production in India hit a record high of 1.05 billion tons. FY 26 is estimated at 1.15 billion tons therein. So we're looking at higher number in this year, back to back in that sense as well. When you look at import numbers, well, yes, India does import, and India imports various other grades like coking coal and low ash thermal coal. In that sense, 243 million tons of an import also is estimated there. My final chart should show you on what we have seen in sense of countries' production numbers and what their estimates are for 2026. So when it comes to China, another increase of a percentage point is what is anticipated in the next year therein, that is this year. India, while of course but a second number in sense of production for coal, is also looking at a growth in production by nearly 3%. When it comes to Indonesia, that could decline by 10%. US production could decline by 9% as well. And when it comes to Australia, because of the weather concerns there, it is going to be a slow recovery going forward into that one there. The markets are anticipating strength continuing in case of the coal prices going forward. There are various reports suggesting that it is going to be between $100 to $140 a ton that you could be looking at coal prices for 2026.
Thank you very much for that. We will slip into a break on that note with the news that it's lower now for the benchmark indices. The Nifty and the Sensex down about 0.25%, and IT is selling off once again. Infosys now the top Nifty loser, extending its fall to nearly 3%. So all of yesterday's perhaps optimism is now being washed away. Tech Mahindra, Wipro also down in excess of 2%. So it's getting quite weak out there. We will slip into a break. On the other side, we'll talk more about the rout seen in IT stocks, not just today, but over the last fortnight or so. Sunil Kaul of Goldman Sachs will join in.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Noise. There's a lot of it these days, especially when it comes to technology.
I didn't quite catch that.
And with so much noise, it's hard to distinguish what really matters to your business. But the answer isn't less tech, it's how we orchestrate. Because when people, systems, and technology work together...
All booked. Stream Kids playlist.
That's not noise. That's the sound of limitless possibilities.
जब से दुकान खोली है मैंने तब से बैंक का ही तो काम कर रहा हूँ। लो बन गया ना चपरासी।
Not banking with AU.
AU.
AU करंट अकाउंट के साथ मिलता है फ्री UPI QR ओवरड्राफ्ट फैसिलिटी और एक ही ऐप से बैंक के सारे काम।
AU। हाँ जी शुक्ला जी, सोच बदलो और बैंक भी।
अपने दिल के हिस्से की सेफ्टी से समझौता? नो चांस। इसलिए पॉलीकैब ग्रीन वायर्स, जो है लेड फ्री और इमरजेंसी में दे कम टॉक्सिक गैस। पॉलीकैब ग्रीन वायर्स, इंडिया सेफ हैप्पी कनेक्शन।
कार इंश्योरेंस डन।
पॉलिसी बाजार से कराया?
नहीं।
तो तू ज़ीब्रा नहीं हो सकता। कार नई हो या पुरानी, पॉलिसी बाजार पे कंपेयर करके खरीदो और 30,000 तक बचाओ। इसलिए तू ज़ीब्रा तो नहीं है, तू है
गधा।
Kind of.
Helps beat sensitivity fast. Sensodyne Rapid Relief.
60 पे चल रहा है तो यहाँ मचाएगा धूम धूम, लेकिन क्रिप्टो का बूम इसे रिस्की लगता है। CoinDCX पे रिसर्च कर, क्रिप्टो फंडामेंटल एनालिसिस पे चलता है, समझ जाएगा तो कोई रिस्क नहीं। सिग्नल वो बाद में देखना। क्रिप्टो नया है पर उसमें इन्वेस्ट करने का तरीका पुराना होना चाहिए, तो रिसर्च, अंडरस्टैंड एंड इन्वेस्ट ऑन CoinDCX, इंडिया का क्रिप्टो कोच।
Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.
Dadu, do you want to upgrade to business class?
Why not? Great flying, Captain.
Get an assured buyback value of up to 60%. Drive India's #1 EV, MG Windsor. Live business class.
माही, कोई कूल बैंक सजेस्ट करो ना जो सोशली कॉन्शियस।
फिर तो SBI कूलेस्ट है।
Really?
SBI ने होनहार बच्चों को स्कॉलरशिप्स दी, गांव के यूथ को ट्रेन किया, स्पेशली एबल्ड को सपोर्ट किया, विलेजेस को अडॉप्ट किया।
That's so cool, man.
SBI, the banker to every Indian. Truly.
Welcome back to Market Masters. After some relentless sell-off in global and Indian IT stocks, we are seeing some respite with IT companies like Infosys saying that they actually see an opportunity of, 300 to 400 billion dollars in helping legacy systems, legacy companies adapt to and use AI. So, are IT companies bottoming out? Are they good to be bought again? Joining me now is the Managing Director and Head of EM Equity Strategy at Goldman Sachs, Sunil Kaul. Sunil, thank you very much indeed for joining us. Well, that really is the first question. The big crash of IT stocks we saw in India and some respite over the last couple of days with this very strong argument coming from Nandan Nilekani and Salil Parekh of Infosys that there is an opportunity gap. It all depends on how we execute. Do you buy that?
Sure, Lata. First of all, a pleasure to be back on the show. Listen, I think you're right. If you look at what has happened in the market in the last few weeks, I think there has been a relentless selling and indiscriminate selling of the software companies because global investors are basically questioning the terminal value of these companies. And as we know, software adoption at the enterprise level is pretty complex, right? There are winners and losers and different cohorts, and somebody has to provide the cleaner data sets for these AI models to work. Somebody has to drive the enterprise adoption, as we were just discussing. And so there would be companies that will benefit from that, including software companies. But I think in the US market, the real issue is not just the terminal value, but the margins for these companies are also at record highs. And so in the next few quarters, until we figure out who is kind of winning, how the business moats are, what the pricing power for these different sectors are, probably there are still going to be uncertainties around this. And so we are not advising clients to buy into the global software companies yet. I think having said that, if you look at the Indian software companies, obviously they have also been under pressure, down 15% or so over the last month or so. Over the past year, given the selling we have seen in Indian equity markets, software companies are down 30%. So we are not expecting absolute sort of large downside from current levels. And in that sense, you can say maybe the stock prices are bottoming out. And given the news flow in terms of Anthropic's announcement on one of the large IT companies driving adoption, I think that's a welcome sign. And maybe that sets a floor on the stock prices for the sector overall. But our general sense is that, look, the Indian software companies, when you look at it from a relative perspective, they are still a bit more expensive than the global peers. And if anything, that valuation gap has widened because the global peers corrected more than what the Indian software companies recently have corrected, right? And so relative returns, they may still be underperformers. And when we look at the Indian equity market relative to other sectors, we still think some of the domestic pockets are much more compelling. So we're still underweight the broader sector on a relative sense. But I think agree with you that the absolute stock prices might find a bottom, especially given the recent announcement on that.
Okay. Well, I just wanted to start with IT companies because it's so much top of the mind. But let me zoom out. The third quarter results are out in India. And what has that given you in terms of earnings growth indications? And what are the good sectors right now?
Yeah, look, I think as you may sort of recall, Lata, we turned positive on India back in November, so a couple of months back, taking it back to overweight within our broader Asia and EM allocations. And that was after being cautious for more than a year. And so I think the main sort of core view there was that we were expecting all the policy easing both from the RBI and the central government to show up in the numbers and drive earnings recovery. In terms of what we are seeing in the December quarter, I would say, look, I think numbers are moving in the right direction. MSCI India, which is what we sort of track, the profits there were up 11% year on year. The expectation was about sort of 8%, so 3 percentage points ahead of that number. But more encouragingly, I think it was the top line that has been driving the growth as opposed to margins. That has been the case for past many quarters. And so the revenue growth was at 9%, which is at a 3-year high. And that obviously that's kind of backward-looking data, but in terms of the forward-looking sort of guidance and indicators also, whether you look at the credit growth numbers, you look at the auto sales numbers, you look at some of the commentaries from defense companies, the consumption companies, we are getting more and more hopeful that the earnings recovery is coming through, and we are anticipating earnings growth to go back to sort of mid-teen earnings for MSCI India, which is what our Nifty or broader market return expectations are 29,300 on Nifty, which is roughly that mid-teen return expectation. So we are not baking in any multiple expansion from current levels, even though multiples have derated from peak levels. But we think just as underlying earnings come through, market should do much better over the next 12 months.
Well, that has been my reading as well when I look at, as you say, credit growth, SBI's guidance, very strong. As well, as you say, auto sales, some of the food FMCGs posting double-digit revenue, double-digit volume after a very long time. But what are your pockets? Would it be consumption or would it be financials?
Look, I think both of those things. We have been overweight financials, as we were discussing. Credit growth is picking up. RBI has done a bunch of easing measures. Some of that is still yet to come through this year and next, and we think that will cumulatively release about 2 percentage points of non-food credit into the system, and we are expecting credit growth to continue to improve, and therefore, balance sheets, as we all know, for the banks is still very strong, and we think profitability can be sort of 15% plus for the banking sector over the next couple of years. So banks is one of the overweight sectors. We still continue to like the consumption cohorts. We have been overweight autos, still like that pack, and as we just discussed, we are seeing recovery across the different sort of pockets in the auto segment. We have been overweight staples as well, both volume recovering and margin tailwinds from some of the input costs there. And so I think consumption plus financials are where we are expecting the leaders of this recovery. And we are, as I said, we are seeing more and more signs of both urban and rural pockets improving. Out of the broader industrial capex sensitive sectors, I would say we still like defense. The current reporting season still shows that some of those names are printing very strong earnings growth, and that's obviously a broader thematic pocket we like across the region, given the geopolitics. Power is obviously a theme as well that is gaining from the strong power demand everywhere. And so, barring a few capex pockets, I would say financials, consumption, and then defense power is where our most overweights are.
Okay, let me just quickly ask you about metals. We did see fairly strong earnings from the steel companies and, of course, the non-ferrous even more, but they've quietly sold off.
Yeah, look, I think metals pack, we're kind of more neutral that camp, just because we do expect metal and precious metals to be sort of having a strong momentum relative to the oil, but it does feel like some of the rally in metals was more sort of technical driven because of sort of tariff issues, because of hoarding in US, and so there was an artificial scarcity in the metal markets in London and elsewhere outside of the US, and so some of the price appreciation we saw in the metal prices was more sort of technical in nature, and I think it's not. I mean, and near term that momentum could extend. But our sense is that as we go sort of to 6 to 12 months at the back half of the year, you should see some of those metal prices come back in, which is why we are not sort of as bullish on the metal complex relative to domestic.
Fair enough. But, you know, even after the announcement of the Indo-US deal, even if the final signing is due, the, you know, punishing 25% tariffs are off, we haven't seen foreign funds return. There was a bit of positive buying, but then again, punctuated with big sells. What's holding foreign funds back? Is it the rupee?
Not necessarily. Look, I think I'll come to the flows in a bit, but just to tackle the question on rupee, I would say, look, I think the weakness we saw in rupee earlier this year and the fourth quarter of last year, to us, I think that was sort of a policy choice, right? I mean, obviously you know that as well, but I mean, the starting point of rupee was overvalued. You had weak equity flows. You had the balance of payment, which was worsening a little bit because of the gold prices and imports there, and trade uncertainties were still lingering, which means it makes sense to have a little bit weaker currency. I mean, where we are now, we think the peak underperformance is behind us. And we'll come to the capital flows, but certainly from over the last 2-3 weeks, we have started to see capital flows improving. We also think that the exports should get a boost with the removal of the with the coming of the trade deal. The lower tariffs or the removal of tariffs on Russian oil should also help. And I think all of that means that your current account going forward should look better than what it was previously. And we have actually raised or improved our current account numbers a tad for the rest of the year. And so I think with that backdrop, we do think that, I mean, you may not see a lot of spot appreciation because RBI may still want to sort of keep it more stable. But our sense is that the peak underperformance is behind us. So in that sense, I don't think necessarily that's a big worry for clients. In the recent conversations, what I can tell you, and I mentioned this to Prashant as well a couple of weeks back on the show, is that there has been a noticeable pickup in client interest, especially in Europe and US, after the trade deal. And I think many of these clients viewed this as a major overhang for the Indian equity markets. And so interest levels have clearly picked up. We see that a bit in the flows. We see that in the conversations. I mean, for what it's worth, at least since the trade deal was announced, we have seen cumulatively 2 billion of foreign inflows in the market relative to sort of 30 billion of the selling from the peak September 2024, right? So I think directionally that's better. What's also important to keep in mind is that if you look at the broader emerging markets, we are seeing very strong inflows in EM equities as a pack, not just sort of passive, but also in active funds. And those trends are really accelerating. In fact, I think year to date, emerging market funds, the GEM funds have seen close to 40 billion US dollars of inflows, which is the strongest pace of inflows that we have seen in EM in the last 2 decades. And so in terms of narratives, in terms of flows, I think the sentiment around EM has been very positive coming into the year, and some of that money will obviously trickle into Indian equities as well. So there is a broader sort of positive backdrop for EM that will be helping India, in addition to India's kind of idiosyncratic drivers in terms of recovery that should be helpful. And I think the last thing I would say is that given all the tech volatility we are seeing, what we discussed at the top of the call, I think at the margin, people are also realizing that it makes sense to diversify a little bit away from sort of tech-heavy markets to more domestic pockets, and Indian equities is one of the best diversifier in that context, right? And so I think if you put all those three things together, our sense is that looking forward, foreign flow should improve into the Indian equity market.
Oh, Sunil, that's the most cohesive, comprehensive, convincing argument that perhaps the bleakness that we saw in the equity markets earlier in February is perhaps behind us. Thank you very much for joining us with your sense of where EM funds are headed and what you like in the Indian market. Okay, well, that's it on this edition of Market Masters and this edition of Bazaar. Thanks so much for watching. Chartbusters coming up after a break.
Co-powered by SBI, the banker to every Indian. Truly.
ये रोशनी का सफर दिलचस्प है
हम सूरज से सिर्फ बिजली नहीं बनाते हैं, खुशहाली को देश के कोने कोने तक भी पहुंचाते हैं।
ये रोशनी का सफर
अदानी, हम करके दिखाते हैं।
Look, this investment guru tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said, well said, well said.
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI ID.
सोचकर, समझकर, इन्वेस्ट कर।
NSE द्वारा निवेशकों के हित में जारी।
Dadu, do you want to upgrade to business class?
Why not? Great flying, Captain.
Get an assured buyback value of up to 60%. Drive India's #1 EV, MG Windsor. Live business class.
आपके कलीग्स भी आपका परिवार है। इनकी सेफ्टी से समझौता? नो चांस। इसीलिए